Hello my fellow freedom builders and welcome back to the channel. Today I'm gonna make a video about some potential going to the moon stocks. Now what is a going to the moon stock? Well, the other day I made a video about this stock Workhorse. And Workhorse, I said I went in here, down here around $5-ish and it went up, and I was simply flooded by messages saying, hey, why didn't you say you entered that? And there are several reasons why I didn't say that, because it was actually not my normal strategy. It was a shorter term speculative swing trade. And what I do mostly on this channel is tell how you can build up a good financial solid future by investing in quality stocks that are trending. But right now in the stock market, it seems like nobody's really interested in quality, they just want trending. So of course, after quite a hectic a couple of days with answering in the mailbox why I was not gonna give you some of these rockets, I will give you some. They are US stocks, and there will be absolutely no guarantee that they will go up, but they fulfill this pattern I normally look for, so you can take a look for yourself and see if they fit your investment profile. Now, there's one thing you should be aware of when we are saying going to the moon, and that is this. I found this little picture on the internet, and just be aware that when people say going to the moon, they of course are thinking of the fact that a stock can rocket up to the moon. But just be aware that you standing here in your normal country, sometimes the moon is actually below you and the stock can easily drop. Now, just before I go into the stocks, I know you're eager to know what are the stocks, why do you want to enter? Let me just say that the entire situation right now reminds me a little bit of the history book, when you read the history books and see that, for instance, the Ford Motor Company back in the 1920s, just before the big crash, they actually had a hard time keeping people in the factories making cars. Now, why was that? Yes, that was because people were making more money on the stock market than they were on the normal jobs, just speculating, knowing absolutely nothing about stocks. They were just down at the stock exchange. They had this big billboards outside the normal stock exchange for retail traders, so they could buy and sell, and they had men writing down on big blackboards there. So this is kind of the situation I'm feeling we are in right now. Not that people are staying away from the job, because today we have our cell phones and so on, but it is kind of the place where just normal workers that knows absolutely nothing about stocks jump into stocks just because they're going up. By the way, I think it was Ford Motor Company that actually ended up hiring people standing at blackboards writing the largest changes in stock price so that people could stay at work and look at the stock prices at the same time, which is hilarious. That is kind of the situation I'm feeling we are in right now. And a good old saying is that when you start getting stock advice from your barber and your taxi driver, then it is time to get out of the market, and right now I am about feeling the same. Alright, but let's get to the stocks, because that is what you have all been waiting for. What I'm going to do today is I'm going to show the stock on a graph. I'm going to tell you shortly why I see this as a swing trading opportunity. And then I'm going to tell you about the fundamentals, because there are actually a couple of the stocks today. I think we have 8 stocks. A couple of stocks that actually have decent fundamentals. So let's have a look at them. We have Cytokinetics, and let me just say right away, these are smaller stocks that I normally look at. But what I look at is, I want the RSI on a weekly chart to be above 50. I want the CRS, the comparative relative strength indicator, to show that this stock is doing better than the overall market, and this Cytokinetics actually is. And then I want some sort of run up, a bounce back to the 20 SMA, the 20 simple moving average here. And that can happen several times. And right now we saw a run up again, a retracement back to the 20 SMA here, and then a push up. And yeah, this is a fine push up, and this could be a way to launch this rocket. In this process where we see the retracements, I also don't want the RSI on the daily chart to go below the 50 line. If you go into this, I'm not giving you any suggestions as to stop losses or anything, because this is risky business, and you'll see that in a second in the numbers. So this is absolutely on your own. I'm not giving you any suggestions, any targets, anything. These are candidates you can have a look at, and then you can decide for yourself if they are worth going into. Here you can see Cytokinetics in Stockopedia. They have lousy earnings quality, lousy value, but of course the momentum is great because they have gone up a lot. Down here we can see what they are actually doing, and that is a biopharmaceutical company, and they have been FDA approved for something with heart diseases, I'm pretty sure. As you can see, the analysts are saying buy. And when we see at the earnings per share, they are a complete train wreck. We can see their free cash flow that I love to be positive. That is deeply in the negative. And of course, no dividends. The net debt is fairly okay, actually. Sorry. And the working capital here is also okay. They cannot pay their interest though, not with their earnings, because they have no earnings. So that's kind of it. Fundamentally, absolutely not an interesting stock. But if you're only looking at this and looking to take a swing at somewhere between, I don't know, 26, 30, 40, you can have a look at that. Now, with these stocks, you can also do another thing. You can go down on a lower time frame, so that if you buy here at 24.80, something like that. Now the market, I think, is closed actually today, but that is due to the 4th of July tomorrow, I think. But if you want to take a look at this and you want to say, I don't want to take the risk from 24.80 down to 22.50 here, you could go down to a lower time frame here. You can see it just broke up over the 20 SMA here on a 4-week time frame. Remember, this is not 20 days SMA, it is 20 periods SMA. So now we are at a 4-hour chart. This is 20 times 4 hours back. You could also go down on a daily chart and seeing, yes, it is also running up over the 20 here. I will accept it, go down below 20, and then I will exit. You can do all sorts of little cowboy tricks here, but that's entirely up to you. Let's take the next one. The next one is actually fundamentally quite all right. Sturm Ruger. They are, if we just look at them here, before we look at the chart, Sturm Ruger here, you can see that they are actually very high quality earnings, great momentum, stock rank. You can also see they're not extremely large. 1.2 billion euro, that's about $1.5 billion or something like that. So they're absolutely not large cap, but you can see they actually have earnings. They have great PEG ratios here. They have okay earnings, at least compared to the other one. Free cash flow is at least positive. They can very easily pay their interest. They have big current and quick ratios here. You can see the net debt is getting better and better, and working capital is getting very good. So this is actually a very good fundamental little company, and they are producing and selling firearms to domestic customers. And well, maybe it's just me, but I have this picture of United States. Everybody has a gun, and right now, as far as I can read, the riots in the last month or so have absolutely kicked their profits and their sales up because everybody is nervous. Let's just have a quick look at the chart here. As you can see, they actually started being interesting down here around 51, and that was back here. And if I had been a little awake, I might have been able to get in here at 62. It jumped up. Now it has made what I call a sideways retracement. This is not a normal retracement where we go down. And that's actually a strong signal. In a normal retracement, you go down and then you bounce up. But in a sideways retracement, momentum is disappearing a bit, but there are enough buyers to keep the stock up, and then all of a sudden it meets the 20 SMA and it shoots up from there. So Sturm Ruger, an okay call, and fundamentally actually one of the better companies in this little selection. Then we have Model N here. Just looking at the fundamentals, it is showing one of my absolute favorite patterns, and that is a top here where the sellers keep getting in, and then a bottom line here that goes up where the buyers are getting more and more eager to enter. It breaks up, have a little retracement, and then moves up. Again, in the weekly chart, it shows all the things it should. It's staying below 50 here on the RSI. It is showing better strength than the overall market. It is even breaking the old top here. So the Model N is actually quite okay from a fundamental perspective. If we look at from a technical perspective, when we look at the fundamentals, the quality in the earnings are okay. The value is not good. I'm not looking too much at that. The momentum is great, of course, because it is shooting up. We have a PEG ratio of 1.5. That's great. Again, a very small company, just above $1 billion in market cap here. We can see that their earnings per share normalized has not been terrific, and the estimates are that it is about to grow, and that of course is great. I'm not too fond of estimates, and especially not in this market, so fundamentally this was probably not something I would touch, but again, going to the moon, I don't know, maybe. Cash flow, hopefully they are just getting up in the positive, so that is great, and we can't see the estimates here. Net debt is fine. Working capital is at least positive. They cannot really pay their interest right now, so they have to go out and borrow some money or use some of their working capital just to pay their interest. So what do? Well, it is a provider of revenue management solutions for life science and technology companies. You can dive into that yourself. But it enables its customers to maximize revenues and reduce revenues compliance risk, whatever that means. But of course, the analysts are saying buy, because it is a small company and it is going up. All right, next one. That is K12. And as you can see, again, a runner up. Some of you might say, well, you're saying this too late, Hans, because it already has gone up something like 100%. And yes, you could say that, but then again, I could also have told you here at 6 in Workhorse that was interesting, or it started getting interesting here, and then at 6 you would say, no, it's not interesting anymore because it has gone up 100%, and then you didn't take the next 400% here. So, yes, the Model N here, it might have gone a bit too much up. I actually had it a bit on my radar here the other day, and that was also because, as you can see, it is making the same pattern here. It is in the green zone. It's doing very well, and that is actually the one we just had. We'll of course go on to this one, K12. That was the one we had next on our list. Sorry for the confusion here. That is because they're looking so much alike. This one has a bit of another pattern here. What I was looking for here was actually this pattern. That is just a simple triangle. We are in a green zone here. This one, and that was what tricked me before, because just as with the Model N, this one in its retracement just dived down just below the 50 line here on the RSI. But then again, it came up, had a single day retracement where the RSI just tipped down, and then it shot up through here. And I was actually, it turned up on my radar here. I didn't buy it because I'm not too much into these speculative stocks. I do have Workhorse and a few other very small positions in other stocks like this. So it's not something that I am pouring all of my money into. If we're looking at here, the K12, We can see that the fundamentals are actually kind of great. The PEG ratio is good, great price to book value, EV to EBITDA is great, Petrosky score 5, not bad. Earnings per share normalized. It's not the straight line that I like to see, but it has been going up quite significantly, and I do like that. Free cash flow is also going up. We are not looking at trailing 12-month here. We can see that the working capital is okay, and the net debt is also great. They can easily pay their interest, so this is actually one of the stocks that if you were to go into this, there would also be some sort of fundamental reasoning for doing this. All right, we have 4 more left. We have Domo. I guess you can start to see a pattern here. We are in a green zone on a weekly chart. I always want to have a green zone. I don't want to take some speculative stocks down here, even though you could say it's breaking its 20 here, it's going up, it's making a retracement. You could have gotten in around 16 and that was great. Yeah, but it was not really doing that great yet here. And the good stocks that are worth holding, they are often worth holding for a longer time. So it doesn't matter if it gone up 100%. You can see the pattern here. The sellers are coming in, they are selling out, but the buyers are getting more and more eager to buy. And now the top level here broke, and we can see the RSI were not even close at hitting the 50 level here. So this one is actually one that has a very good momentum pattern here. If we're looking at it at the fundamentals in Stockopedia here, I should say that there is a link to the Stockopedia and the trading view below here. The fundamentals are not terrible. They're not quite at the 70 in the earnings quality that I want. The momentum, of course, is great. You can see the Petrosky score is at 6. The normalized earnings per share is negative, but is getting better, and the estimates are that it will be even better. There's a negative free cash flow. You can see here that the Altman C score, I have not made a video about that, but I will soon. That is in distress, meaning that there's a very high probability of this company going bankrupt. But as you know, that doesn't really matter these days. Hertz can go up 500% after it declares bankruptcy. Wirecard can go up several hundred%. All bankrupt company. I made a video about that the other day, whereas bankruptcy apparently is the new buy signal. So go figure. You can see here that the net debt is going a bit up. Working capital, there's not much left of that. They cannot pay their interest. So basically not a company that is solid whatsoever. Doesn't matter. Analysts are saying buy. Why shouldn't they? All right. So there are 3 left here. And we have, we could just do like this, of course. TPI Composites. Again, a stock that is in the green. Has gone up here. You could say that it might be hitting some earlier tops here. That would be a fair assessment. It is going up though, just hitting down, kissing the 50 line on the RSI, and here it is showing even better strength. Again, we see a pattern like this where the buyers are getting in. Of course, we want stocks that are going up, and then it broke the top, and who knows where this could end. If we're looking at the fundamentals here, TPI Composites, they are actually quite fine. 76 here, 86 here, and overall ranking 84. So they have a very small PEG ratio, and that is of course the PE divided by the estimated growth in earnings. And that is because they are estimating earnings growth of 450%. Well, yeah. Again, I'm not too fond of these estimates in this time, because I think we will see some quite dire realities kicking in when the Q2, Q3 is coming. We saw the fairy tale numbers of the unemployment rate yesterday. That was 11.1%. That is absolutely hilarious, especially when the Bureau of Labor Statistics keep saying that they have made a huge mistake. They keep making it and they won't correct it. So the unemployment might be even double. So the estimates here, be careful believing these. free cash flow here in the negative. Net debt is growing. So again, the fundamentals are okay, but then again, we are not buying this for the fundamentals. It's just going up. So of course we want to jump on the train. Now, here comes a little interesting thing, and that is, here comes the Graf Industrial Corp. And I know this has already run up from around 10 to above 20. But the Graf Industrial Corp, if we are looking at the description here, Graf Industrial, you can see that they're absolutely horrible in the fundamentals, not making any money whatsoever. Now, what is that? That is because the Graf Industrial Corp is a blank check company. Now, where do we know that term from? Oh, yes, we know it from the Tertius company. We know it from all of these. The way Nikola went on the stock exchange, the way was a workhorse went on the or Hyliion went on the stock exchange. I can't even keep them out from each other now. But a black check company is a blank checks company. Is a company that is on the stock exchange and they have a lot of money inside and they are waiting for a good candidate to acquire, to make an acquisition or a reverse merger as it is called, so that a company that normally had to go through a hefty due diligence, spending a lot of time getting into the stock exchange, they can get on a lot easier simply because they are purchased, they are acquired, they made an acquisition by a company that is already registered. And I've been searching a bit around Graf Industrials and I can't seem to find anything about them buying a company, but there might be some news out there I just couldn't find, and that is the reason why it's going up. Or maybe people are simply just buying these blank check companies because they are suspecting that they will be buying something soon, and that could be something in the electrical vehicle part, it could be hydrogen, it could be anything. Right now it is all this trucking electrical vehicle hype that is running, and in a month it will probably be something else. But this is actually one of these blank check companies that can go in and buy stuff, and that is why their numbers here are actually non-existing, because they don't even run a company. And as you can see, there are no analysts they're covering this one. So go figure, up 100%. All right, the last one today is something that, to be honest, I'm not sure what they're called, because here in TradingView they're called Brainstorm cell therapeutics. But if you're going over here, now I can't spell, they are called Brainstorm cell therapeutics. I believe that is the same anyway. It would make more sense for them to be called Brainstorm, but whatever. They have the ticker BCLI, and I'm pretty sure they have that here as well, BCLI, so what they're called doesn't really matter. What we can see here is that they are in the green zone, meaning that they're doing way better than the market. They were going up through the 20 SMA, they were having a retracement here, so we could have gotten in at around 10, then it ran up, had a new retracement, had a good jump up yesterday. So again, this is one of these, we are in a green zone, people are buying, waiting for the retracement. And of course, just remember that there is a very significant difference between a good buy and a good buy. And this one might be a good buy. This one might also be a good buy. But all of a sudden, there will definitely come a goodbye and it will drop. So just buying on the retracements can be, buying on the dips here, can be a bit of a hazardous adventure to go out on. But again, if you're running with something like Brainstorm or Brainstorm here, I suppose they're called Brainstorm, you could go down to, for instance, the 4 hour. And I do like to find the time frames where we can see that an SMA is holding up. And right here, you can see that the 4 hour, on the 4 hour, we can see that the 20 SMA is actually holding very nicely up. So you could go in here, have your stop down here and not take quite a slot risk as normally. Here you can also see that if you wanted to get in here, you could buy when the 20 SMA broke. You could follow it up, and at least if you went out when it broke downwards through the 20 SMA, you would have taken some profit here. And it broke up again here in 1170 yesterday, and you could be sitting on a nice profit now and moving your stops up to reduce your risk. So basically, these are 8 candidates that I don't know if I'll be taking a single position in one of them. I just might. But just remember, let's see here, Brainstorm Cell Therapeutics, they have a market cap of 320 million euro. That is definitely not very much. No revenue. Many of them have terrible fundamentals. But if you are a short-term swing trader, you can go into these, but just be aware, and I'm saying this again and again in this video, that it is on your own risk. These are not stocks I'm recommending that like I do sometimes when saying, yes, I'll definitely run for this stock. No, this is swing trading plays where I can see the same pattern evolve again and again. And remember that technical analysis, what it is the study of repeatable patterns. So I have seen these patterns again and again and again over the last 35 years I have been investing, and they might be good to go for in a market like this, because nobody really cares about the fundamentals right now. As long as Fed is pumping money in and the Bureau of Labor Statistics keeps pumping false numbers out, then I guess everything is okay. I might sound a bit conservative or a bit tired of all of these hype and pump and dump schemes, and actually I am. I look forward to, dare I say, a larger crash, or at least some sort of getting back into normality in the market again. But as I've said to all my Danish subscribers, as long as I keep getting buy signals, I buy the stock. So I'm pretty much almost 100% invested in my Danish, Swedish and Norwegian portfolios, or at least the Danish and Swedish. The Norwegian is a bit behind. So even though I think there might be coming some consequences into the market at some point, doesn't matter. I get the buy signals, I buy, and that's how it is. That's all for now. If you haven't done already, remember to hit the subscribe button down there and the like button. And if you want to make sure that you see the new videos I am posting out about these potential going to the moon rockets, make sure to hit the bell notification as well. I might just in a week or two make a follow-up video seeing where these 8 stocks ended, were they any good, and then come up with some new candidates. That's all for now. Take care of yourself and your money out there. Bye for now.